Okay, beginning with the dollar index. Moving to the daily chart. So daily chart currently the looks like the buyers are in control slightly at the moment. Yesterday there was sellers were in control. Overall, still a downtrend. So we're seeing kind of movement between the 79.3852 and the 79.8949 levels. Looks to be so this whole week is kind of in between those two, this two range right here. So any movement, likely movement to the upside will move to the 80.1105 and then possibly up to the 80.6693 supply level, and anything below likely to move down to the 79.09 and the 79.04 demand level. Any questions on the dollar index?
Yes. So, which direction do you think with the highest probability on what you're trying to analyze? So, where do you want it to go? Or where do you think, part of the speculation is where do you think it's going to go?
Right. So let's we'll do the very basic, draw a couple of trend lines, and we'll take a look at what's going on over here. So we'll start with this one, primary downtrend. Secondary downtrend might look something like that. Primary uptrend has been, both of them have been breached. So this would be the new one. Okay, so at this moment in time, the market is essentially moving sideways, but there's a very strong seller bar on the 9th, and I think that amount of pressure to the downside will likely cause movement to the downside. That's what I forecast. It could go up to the upside, and I don't know what to make of this downtrend right here, since it's been breached from up here. If perhaps we could redefine that one as maybe something like this would be a more accurate view of what's going on. But at this moment, if it were to go up, it would go up that way. But I think there's overall, in my view, it's 50-50.
Okay, your view is 50-50. Okay, let's help out Anthony a little bit. Let's go. Hi, Phil. How you doing?
Buongiorno, welcome. Thank you very much.
Okay, so let's help out Anthony. Phil, what do you reckon?
You got a weekly, please. You got a weekly, please.
Oh, the weekly view, sure. Okay, weekly view.
Cool. Well, first question is that demand or supply?
Right now we would be at a level of, I suppose it would be a level of demand at the moment.
Correct. What's the trend?
Overall trend is downtrend. Medium trend is an uptrend, and current short-term trend would be a downtrend.
Down? Draw a downtrend line, please.
Sure. So downtrend line would look like.
Okay, maybe.
That would be our primary downtrend. Secondary would be something like that. It's been breached. Uptrend will be perhaps like this, and secondary uptrend. Whoops. Will might have looked like this. So a little bit more to the right, like this.
Yeah, that'll do. Okay. So the level of demand, who's in control?
Currently, the buyers are in control at the moment.
Cool.
At a level of demand. Okay.
Draw your demand lines, your lateral demand lines.
Demand lines. This is what I see as the major.
That'll do. Okay, so we've established the trend is what?
Short-term downtrend at the moment.
Downtrend line's been broken, yeah?
Downtrend line has been broken. Yes, yes it has.
Let's get rid of that.
Come again?
That's fine. Go to
Yeah.
the daily, please.
Moving down to the daily.
Cool. We established we've got a downtrend. Downtrend line's been broken. A level of demand and buyers in control. So here we go again. What's the trend?
So likelihood to go to the upside is higher probability than to go to the downside.
Yeah, where's your risk?
I guess the risk would be perhaps
if you
down.
trade long, where's your risk? Is it big or small?
It would be smaller than.
If you trade short, where's your risk? Big or small?
It would be pretty big. It would be.
Okay, so we want to trade on the small side, yeah?
Right.
So probability you want to go long, yeah?
I agree.
Okay, and the last candle, completed candle is a higher high, even though it's bearish.
Right.
Cool.
Okay, so conclusion would be that the likelihood that to the upside is higher than it is to go to the downside.
Okay, so we go to the 20th of December. We'll start there.
Okay.
There's the low.
Right.
And then we have a high. Then we have a low.
I see.
That lower high compared to the previous low.
I see. Okay, cool.
Yeah. We have a level of demand. High.
Right.
And on the weekly, you've got a doji. So a doji at demand. On the daily, you have a higher high at demand. Lowest risk is going long. I'd go long.
I see.
All right. Cool. Beauty about Johnny K. Your turn, Ann. If you're going to help out Anthony, how would you do it?
Okay, so we'll just look at yesterday's candle, Anthony. We'll see what's the high on yesterday's candle, please.
The high of yesterday's candle was at 79.94.
79.94. Is it 79.04?
Let me. It is the high is 79.94. Oh. On the
90/40. Okay.
90/40, right? So I'm looking at the.
Okay. So what's the high of the previous candle, the blue candle, please?
The previous high is at 79.89.90. So it is lower than yesterday's.
Okay. So and the lows are yesterday's candle's lower. It's obvious that it's lower than the previous day's candle, right?
Correct.
Okay, so on the daily chart, if you expand it a little bit more, what's the actual trend that you can see? Now, what I can see is that it's a downtrend. Is that what you can see as well?
On this view, I guess we're looking at about 6 months worth of data. It is clearly a downtrend.
Okay, so and it's a short-term uptrend, right?
Yes.
Okay.
Short-term uptrend.
All right, so it is at the level of demand at the moment, but the candle of the, what is it, the big long red candle, what date was that?
That was on the 9th.
On the 9th, okay. So in my opinion, because of that strength of that candle, and if we draw the fib from that high to the low, where did it retrace to with the current candles, like the last 1, 2, 3, 4, 5 candles? So let's just draw the fib from the high to the low and see. Let's see where it retraced to.
Sure. So I think, let me take a look, it would be like this, or this one's higher, 80.67 and 80.68, so it would actually be here.
Okay, let's put it there. So what can you see at the moment? So where did all those blue candles retrace to?
The 16.
Okay, so about the 38%, right?
38,
yeah. Okay, so what that is telling me is that if it's really strong to the upside, that candle should really be where? Past the 60-something%, right? So probably even past the 50% and even the 60%. So at the moment, what's going on there is that it's struggling to break the 38%. Do you agree?
It's struggling to break the 38%.
Okay, because of that strength of that red candle, there's more a probability that it will fall to the downside and retest the demand level. So where is the next demand level, do you think?
There is a, so I think, let's see here, so the strong demand level would be the 79.34 would be the first one, and then a major one, I guess, according to the weekly, would be the 79.080. Right
Okay,
here.
so it will also be higher, right? The close probably of the, the two blue candles after the red candle. There's like the close there. That would also be a very good demand level right there. Okay, so that will test that first and then move further down. So because it's a those previous candles are not quite that strong, only retrace to the 38% or 32%, then there's a very strong possibility that it will drop to retest those demand levels. So that's my view.
I see. Okay, so perhaps, well, so, yeah, I guess that kind of leaves me. Okay, so I guess your viewpoint is that it's going to go down, and then Phil's would be that there's a likelihood that it'll go up because it broke this trend line right here.
Yeah, it broke, but really, if you look at the weekly chart, it still closed below the downtrend line, so it didn't really violate it. If the close is above it, then it would have violated it, but
Mm-hmm.
the previous week's candle closed below that, so it's not really that strong. If it's strong, then that red candle should be a blue candle and would have closed above the downtrend line.
Right.
Okay, so now that downtrend line, really you need to move it to the open or the top of the red candle, then that would still be within the downtrend line right there.
I see.
Yeah. So it's
Okay.
still on the downtrend, even on the weekly, still on the downtrend there. The bigger picture, if you even go to the monthly, it's still on the bigger downtrend. It's only on a short-term uptrend.
Right. Okay.
Okay, so there's even on the monthly, if you have a look at that, there are still demand levels that needs to be retested. So, but on the lower time frames, of course, it needs to test the immediate demand levels first.
I see. Okay, so I guess that still kind of gets me back to where I started. Is okay. Well, I think if it went up here, it could. So I guess in the short term, since we're seeing a short-term uptrend, in the next couple of days, there's possibility for it to go to the upside, and you know, maybe if it doesn't do that, maybe within the next couple of days, then we'll see a continuation to the downside. So that would be my viewpoint, is that we're at an indecision, and we're going to have to. I think the market will make a decision at a in the very near future, and it could either go up or down. And if it were to go up, it would go up to. It would probably likely obey this trend line, and then if it were to go down, it would continue down to this demand level, and then perhaps down to here, and continue the overall downtrend.
So where are you more inclining to since it's, in your viewpoint it's 50-50? More to the upside or more to the downside?
I think it's a very tough call. Well, I'm going to say, I guess for today, it'll go to the downside as a result of the overall downtrend, the strong seller bar. Yesterday's seller bar, I believe that the sellers were actually in control and formed a new low. So I believe that it should go down. There's a strong possibility that it'll go down.
Okay. All right. So if it chooses to go down, then what will you do with the rest of the major currencies?
I'll go long.
All right. Perfect. Let's cut through there. Let's go through directly into your what do you call it? Your trade that you did yesterday based on the plan. What happened? Did it get triggered? Did you enter? Is it what you expected? What was the end result, please?
So everything played out beautifully on my side. So this is how I set up my trade yesterday. I should have took a picture at the 4-hour chart, but so I set up my trade like this, and then basically it was around here. I know I looked at it this morning, and it didn't. I had my first entry. I opened it at the market while we were still we had our session, and then I set a mechanical order a little bit higher than that. So yesterday, I basically entered around here with the market value, and then I set my entry to catch the better price around here. So today around, I guess it would be around 1 o'clock Eastern time. So it was around 3 o'clock or something like that. I remember when I checked it. I got triggered in, and then it dropped and hit both of my targets. I targeted the 38 and the 50. So it played out beautifully for me.
Awesome. So what did you learn from doing that exercise?
The big thing for me was the multiple, like going down to the smaller time frames. I think I'm starting to get a better view of how I could use that.
Mm-hmm.
So that was very helpful for me.
What else? What can you learn from that exercise?
Another one too is I think that my targets using the fibs was appropriate,
Mm-hmm.
and you know, the other thing too was that I guess this was one of, you know, targeting, was it the combination of going in when I just kind of saw the opportunity and then setting up the mechanical order. I think that is a pretty good, you know, I haven't really tried that before, and that was my first time doing it, and I think it worked out pretty well for me, and the end result was pretty good.
Good. That's the answer I was looking for. Right, perfect. Because sometimes, you know, when in doubt and you're not thinking, then at least put a little bit in there and then still put a mechanical order, and it worked out well within your favor. Very nice. Excellent. Okay, nice job. And we'll go through with you, Phil. Continuation with the macro fundamentals, and then looking at your trade from yesterday. Whether it panned out, which one did you do? Did you, yeah, pretty much what it did.
Yeah, sure. To obviously the for announcements or slash news. This is in New York time. Pound and US dollar for the next 12 hours for the market closes for the week. And looking at the futures market, Asian markets have gone through the roof, 2% on the Nikkei. So all in the green. Euro's in the green. US is in the green. And looking at the futures, they're all in the green. So probability, futures, currency follows futures. Another good night for the currencies. Done that. I traded the euro dollar, and I actually entered, on quite clearly an uptrend. From there, 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 there. Put in the Fibonacci retracement from there. So it's an uptrend on the daily, and then I went to the 4 hourly. And I think we entered about 16th. Yesterday 16th. Yep. So my entry was around this area here. This is in Eastern summertime, so it's an hour ahead. I didn't wait for it to come down. I put my stop pretty much around here, on the base of that. Entry was there, and target was around here. So thanks very much.
All right, perfect. So target got taken and also made money.
I do have one question, which I think I forwarded on early this morning. When we're swing trading, which trend are we looking at, the daily or the weekly? Since the intention is to work everything off the daily chart. Because, I mean, obviously on the euro dollar, they're both in an uptrend. But I was just doing an exercise this morning for myself, i.e. the US dollar Swiss, which was a mixture. So I just wanted a bit of clarification on that.
Depending on the plan of what you're trying to do, this is where you really need to define your swing trading definition. Are you talking here overnight, 2-3 days? Are you talking here 6 weeks, 2 weeks, 3 months? So which one?
Oh, okay.
Yeah, you need to define your swing trading intention.
Okay, well, quite clearly that one is an uptrend. 3 months. You know, that no ifs, buts, whatever. I mean, it's like there quite clearly, and it got in on a tracement of 4-hour demand level of a high low. But I'll just ask a straight to answer the question, obviously.
Because you ended it over 4 hours, so I mean, how many hours for your trade to be taken?
6.
Is that swing trading though?
Well, this is a answer a question I asked. Is if we do wait for the daily candle to finish if we're swing trading. You say no because we go to the smaller time frame to enter in the direction of a trend. I entered on the 4-hour chart. The intention was a swing trade because they're going with the trend. But this is a 4-hour chart for me. I'm using the 4-hour chart to daily chart. I day trade.
Yeah, because if you go to a 4-hourly chart, you go back to your 4 hours. So where did you enter?
Around here.
Okay, where was your target point?
Yeah.
Was your target based on the 4 hours or was based on the daily chart?
Based on the daily.
Okay, going through your daily chart. So if it was based on the daily chart, where from lower, higher high, higher low, back to level supply. Now, this is where it didn't even take 2 days in order to get to your target point. So it's no longer pretty much a swing trade. Now, if it's going to be a swing trade, where now your target point was the closing price of the end of the day, how can you now define your target point then?
Because that's the last peak.
Yeah, but look at the price though. You bought it at a level of demand, the closing price ended at a level of supply. So the question is, where is now, if you're getting it at the end of the day, where now you're pretty much down 84 pips. So if you're getting it at the end of the day, because your definition is basically swing trading, I need to wait for the end of the day.
Yeah,
but technically speaking, the end of the day was mainly on the doji.
But you said I entered on the 4 hours, so it was a day trade.
Yeah, but however, this is where now you're trying to confuse me with your terminologies of, since we're swing trading, you need to define the swing trader.
Is swing trading based on the daily chart?
The swing trading based on the daily chart. Yes, and you're buying at the cheapest price. And where will you buy it at the cheapest price? The daily chart?
Okay, so the intention is M1, we trade using a smaller time frame at level of demand or supply in the same direction as a trend. Correct?
Say that again?
I'm just going to think aloud. Swing trading is based on daily candles, yeah? In order to do
it depends. It depends on what type of swing trading you're talking here. Because swing trading can also be used on the weekly and the monthly chart. So if you're talking here short-term swing trading, then obviously the daily chart will be used. Do you play golf?
Yes, I do.
So if basically it's saying par, I don't know, par
I
5.
understand the analogy that you're going to use. It's fine.
Okay, so if you understand the analogy I'm going to use, then you're going to understand MTFA perfectly too then.
Well, I don't, obviously. Otherwise, I
Well,
would
then there you go. Then analogize it the same with your understanding with golf, with trading. How can you analogize that then? With the same similarities with golf.
Well, if I've got a par 3, I don't go using a wood.
What will you use?
7-iron.
7-iron. Okay, so check this one out. The currently where you bought it, currently level of demand, 3280. Your destination is 3380. What will you be using in terms of a time frame?
Well, if I'm using swing trade, I'll be using the daily. Swing trading equals daily chart. Day trading equals 4-hourly chart. 140 yards on a is a 7-iron. That's it.
Okay,
When I go
so
less, I go to a 9-iron.
if the ball is at 3280 and where the hole is at 3380, which time frame will we be using? Since you're not going to be using a wood, you're using 7-iron, which time frame will you be using?
Well, I'm on a shorter leash. I'll still from three pars, 140 yards. Use a 7-iron. If I'm swing trading, I use a daily chart. If I'm position trading, I
Well,
use a
you
wood.
just said that, you're on a shorter leash. You're on a shorter leash right there, so will that be still considered as swing trading or mainly more overnight trading?
Well, a day trade gets closed in the same day.
Which it did. From using your 7-iron, it just basically did in one day. So will that be considered as a swing trading environment?
If it got closed in a day, it'd be a day trade.
Exactly. So how can you use, if you're going to use a wood, where will be the ball? Where is it going to reach?
Fucking out here somewhere.
How would you know the next hole is going to be at?
I use
How
a
can you
easy chart.
how can you determine the next one? You can also use the
Okay.
daily, right? But how?
There.
Okay, so you look at that, probably that's how many months? 6 months? 9 months? Okay.
Yeah.
So if you're going to use a wood, 3487, that's another extra 100 pips. So from where you're going to be swinging your ball, that's 200 yards. Are you going to use a 7-iron or are you going to use a wood?
I use a wood.
Okay. How long will it take in order for the ball to get to 3487, you reckon?
3 days, 4 days, maybe a week.
So what will be that definition? Will that be swing trading or day trading? Or overnight trading even for? So what is the weekly telling you then?
Last completed candle's bullish, has a high, high, high low. Current weekly's not finished. It has a high, high, high low.
Then what's a probability that the ball can go to 3487?
Pretty good.
What is pretty good? You need to define it.
Highly probable.
Out of 100, what would it be?
I'll go 90%.
90%. Okay, so if it's 90%, will you be shorting that on the shorter time frame?
No.
Okay, if you go back to the daily, so you said no. It's highly objective. You said no. You bought it basically at 32.80. You saw on the weekly that the probability that it can go to 34.80 is highly probable, 90%. And that will probably take 2, 3, 4 days. So technically speaking, if you're buying over there, your target going to be at 33.89, or your target will be at 34.80.
It's got to break this level before it goes to the next level.
But you already saw on the weekly, and you're giving me 90% that the probability is going to go to 34.87 is 9% probability. So what is the odds and probability that 33.90 will be broken anyway? Because that's already the high of last week. So if you're looking on the weekly, that the closing is right at 33.90, where you bought it at is the low of this week, and you're saying to me or saying to everybody in this room that 90% will go to 34.87, so why would you put your target at 33.90?
Okay.
So in terms of swing trading, what are you trying to achieve then? This is the thing I want to know, because unless you're not gonna define your definition of swing trading, you're gonna make the same mistakes over and over again.
Swing trading is 2 to 3 days. That's it.
Then why put your target at 33.90? Because you're hitting a 7-iron rather than you hitting a wood. If you want to be a swing trader, then you need to hit the wood. You need to use the wood in order to get to 34.87, 34.90. Then that means then if you're only using a 7-iron, then you're only, rather than 200 yards, you only hit 100 yards. Then you got 2 strokes rather than 1 stroke. So does that answer your question in terms of which time frame you'll be using? The weekly, the daily, or 4 hours?
No, I'm more confused than ever now.
How can you be so confused? We all basically, everything.
If I'm day trading, I use the 4-hour chart. If I'm swing trading, I use the daily chart. If I'm position trading, I use the weekly chart. That's it. If I want to hit 300 yards, I use a wood.
Then there you go, Phil. If that's the way how you believe in...
If I want to do 80 yards, I use a sandwich. So that's 3 time frames.
In trading, there's really no right and wrong. It all depends on the way how you see it. If that's the way how you see it and that's the way how you believe in it, then just stick to whatever you know.
Well, I don't know.
You know, you gotta just stick to it, because, you know, I'm giving you the right answer here. How can you not understand it, mate? You said it to...
If I'm swing trading, for me, that is not a level of demand.
Where will be the level of demand?
Okay, because that there is a lower low and a lower high. Has a probability to continue to the downside.
How?
Okay,
How could it be a probability that it can go to the downside? Go to your weekly chart.
Hang on. Just give me a sec, please.
No, we're going to go on a bit by bit. So, if you're trying to tell me that on the daily chart is the highest probability it will drop, but you're telling me on the weekly it has a 90%, which is a high probability that the price will go up. So how can the daily chart drop if the weekly has a 90% probability is going to go up?
Because it's at a level of supply.
Even it's in a level of supply, look who's in control, the bulls or the bears.
It's blue, bulls.
So are you swimming against the tide, or are you with the tide? Are you going to swim against it, or you want to swim with it?
The objective is to swing with the tide. Okay.
So I'm going to ask you again, what is the probability that the price is going to go to the next level of supply, which is 34.80?
Was that candle pretty strong? Yes. Good.
Give me the probability. I want you to give me a number.
90%, Ronaldo.
90%. Okay, so if 90% that the price will go to 34.80, 34.90, and last Monday, Tuesday, we also established on how to draw the resistance line. The resistance has to be on the high in the past. Why? Because institutions are resisting those prices on that high. Okay, but the point is 90% the price is going to go to the upside. Okay, Anne and Anthony, give me a probability out of 100 from what you see that the price is going to go to 34.80, 34.90. Let's start from you, Anthony.
I would agree at 90%.
How about you, Anne?
Mine's 100%.
Okay, so the bulls are in control. We all agree it's highly objective, 90%, 100%, 95% that the price will go to the upside. Okay, do you get that feel? Do you fully understand that concept before we go to the daily chart?
This candle here is strong. There's a high, 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 low. Yes, it has to break. It has to go up to there and break it. Understand that. No problem.
Okay, great. You understand it fully. Let's go to the daily chart. Now, the closing price is in the level of supply. And you're trying to tell me that it's a higher high, higher low, and the probability the price should go and drop is highly probable. True?
That there,
Uh-huh.
that has lower lows and lower highs. Sellers in control.
Okay. So where do you want the price to go then? If you believe that the price is going to drop, where do you want the price to go to?
It'll go to the next demand/supply area, which it is. The next peak or the trough, whichever one.
Okay. So what if the price doesn't want to go to where you want it to go?
We'll have to wait for the daily candle to finish because the intention is a swing trade.
You can't.
I know.
You cannot. You cannot wait for the daily to go because looking at the weekly, who's in control?
Buyers.
So if the price is already on the level of demand, where it's already retraced at a good level of demand, look at that. Where is your first support area? Your support line. What will be your first support line? The top of that square or the bottom of that square?
Be the top of the square.
I'm sorry?
To the top of the square.
Okay. Did the price go to the top of the square?
No.
Of course it did. If we're looking at the highs of the previous, say, look at that, the highs, 1, 2, 3, 4. 4 times it hit. The price didn't want to go below any more of that.
You need to make your square bigger, I think.
So we spoke about this Monday. How do we define support and resistance lines? Is through the highs and the lows to make it more highly objective. Why? Because institutions either support or resist those lines.
Yep.
Okay, what is a doji?
Indecision.
Indecision. So if you know it's an indecision, and you know that on the weekly, what is the probability that it's going to go up?
90%.
Why 90%?
Because it's bullish.
What does bullish mean?
Buyers in control.
And what does buyers in control mean?
They won the battle between buyers and sellers.
Which means?
Price is going to go up.
How can a price go up?
Because there's more buyers than sellers.
Bingo, that's the answer I'm looking for. So there's more buyers than sellers. 90% that the probability the price will go to the next level, which is now 34.80, 34.90 is highly probable. Retracement. correction, doji, indecision, didn't want to go anymore, didn't want to go to the upside nor to the downside. It's an uptrend. You bought at a level of demand. Hence, what happened? The price went up. Why is that? Because who has higher in terms of hierarchy, the weekly or the daily?
Weekly.
Okay, since the weekly has higher hierarchy than the daily, then does your opinion, based on your belief, based on your perception, does the market really care what you think, whether the price will go to 132 or the lines that you basically put at?
No. No.
Okay, so if it's a no, and it's a level of demand, what are you supposed to do?
Demand on an uptrend, we buy.
Okay, now if you're going to wait for the end of the day, where is now the price?
Yeah.
Okay, so 33.75 is a level of supply. You're now down at least about 100 pips to the upside.
Okay.
So if your intention now is that the target, the probability is going to go to 34.80, and you're buying at 32.80. The question is, how long will it take in order for the price to get to where you want?
Probably another week.
1 day, 2 days, 3 days, 4 days, who knows? It depends on whatever the market will do. So this is where your target points needs to be labeled. T1, T2, T3, T1, 33.80, 33.90, T2 is going to be 34.80. T3 will go beyond whatever 34.80 if it surpasses 34.80. So, if you're saying to yourself, well, if I'm buying here at 32.80, if it goes to 32.90 and it goes within a day, so be it. If it takes 2 days, so be it. But in terms of looking at the sizes of the bar of the euro against the dollar, that will go pretty much in 1 day. Will that be considered as swing trading? No. It's going to be a day trading environment because it's going to take, on average, it takes about 100 pips, 150 pips for the euro to go to the upside. Currently, anyway. Okay, now, did that answer now your question?
I'll get back to you.
Come on, man. Jesus, Phil. You're not listening any longer, mate. It goes in and out. So in terms of Anthony, I know Anna fully understand it. Anthony, did you understand what I was saying for the past 20 minutes?
Yeah, so basically it's about like a trade intention, right? And I think what you're trying to get at is that at this moment it wouldn't exactly be a swing trade, at least to get to the next supply level. It would be, I guess, more of a momentum type of trade. So it would be definitely be in a day trading type of environment.
Okay, so in order to get to the 34.80, how do we define 34.80?
We use the weekly for the next peak.
Alright, so if you choose not to use the weekly and you're choosing only the daily chart, then what type of trading is that?
Day trading.
So what do you want to be?
Swing trader. Swing trader.
Are you sure though?
Method 2, method 3, not a problem. I'm just slowly get my head around the entry points on a trend, on an uptrend. I think I've got that sorted, and I was trying to work out which trend are we using, either daily or the weekly, and that's what I'm about. So that's it. The last completed candle on the Euro weekly is a bullish candle. So it has to, the daily and lesser time frames have to make a low on the weekly chart.
Okay, so if it creates a low on the weekly chart, are you going to be buying on that low on the weekly chart, or are you going to be buying at the high of the weekly chart?
If you've got that as briefed, it's got to make a low for this candle. Would I be buying at low of the chart? Yes.
So how does the low of the weekly, how can it get formed? At the end of the week or sometime during the week?
Sometime during the period of the candle.
And within that period of the candle, when would that happen?
Well, it depends on which chart you use to define, to get a clearer, I'd use a 4 hourly on that, personally.
Why the 4 hours?
Because that's what the banks use.
Yeah, that's fair enough. But the 4 hours is also has 6 oscillations that's oscillating in a day.
Yes, there's 6 candles in the day, so 36 candles for every 1 candle of a week.
30. It's only 5 trading business days, right?
30, yeah. Yep.
So how can you then buy at the low? Okay, if your intention is not to swing trade, and you're telling me that there's a 90% probability it's going to go to 34.48, 34.90, even 35. So just looking at that, how many days can it go to 34.90?
A week, 5 days?
Could be 5 days, could be 2 weeks. So is that swing trading?
No, it's position trading because you're using the weekly.
What is the definition of a position trader?
Hold for a period of time greater than a month, 2 months, etc.
So that is not position trading. There's more of a, see right there on that, that's 1, 2, 3 weeks. On a correction over the swing, there goes also 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. But if a continuation of the swing took 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 1, 2, 1, 2, 3, could be take you another 2 weeks to get to 34, 78, 35. Now looking at your weekly chart, what would have been a better price of getting in? 32.50 or 130?
130 is the best option.
Absolutely. Now, this is the same format on what you're looking at on the daily. So if you're gonna tell me to, I need to wait for the end of the week in order for the completed candle to see whether if it's gonna go up or not. So there's that higher high, higher low, 130. Then all of a sudden it went to 133. And they're saying the probability can go to 134.70, 134.80, 134.90 is highly probable. And what is that probability? 90%. Does the market go in a straight line? No, it has to create a low. So the low is going now to the smaller time frame of the daily. And if your personal opinion is going to go on the weekly, on the 4 hourly, but looking at the 4 hourly, so if you go to 4 hourly, Notice how the price doesn't want to drop any further below 130. And there's like few days ago. Okay, there it is. See how the price didn't want to go even with the box. It's already saying after that big nope. Over there, look at that. You have a red doji, nice long upper shadow. You have a blue doji. Look at the low of the blue bar and the red bar. Is the low lower compared to the red bar? Is the low of that bullish bar lower compared to the red doji?
This one? This two here?
Yep. The red doji and the blue doji.
It's higher. It's higher.
Okay, so you have a V formation based on the lows. So in other words, the lows no longer want to go below the low of that one. So if institutions, if banks are looking at 4-hourly chart, and now you have a bullish engulfing, the low is higher compared to the previous low, what are you supposed to do? Are you going to buy, or do you think you still believe that the price is going to drop further?
We buy at demand.
Okay, so if you're looking at a 4-hourly chart and you're telling me, you're telling everybody in the room that you're going to buy at demand, does your opinion really matter that the price has to go to 132?
No, because you've got a bullish bar with a high low.
See, you found your evidence on a 4-hourly chart, then why won't you buy? So now you're buying at the cheapest price where institutions are buying, and you go back and tie it up to your plan. Looking at your weekly chart, what is your intention? What would you like to do? Now you're telling me you want to swing trade, correct?
Yes.
So where will you tie your target then? Is your target going to be at 133.90, or you want the target to be at 134.48, 134.78?
Well, it has to break this to continue up, so you can target there. That's
Where, sorry?
level of supply. That's the next level of supply.
So where was your target then? 133.80 or 134.70 or 80?
High this candle.
That's where your target is going to be?
No, that's where it was.
No.
It'll be here. It'll be here.
Okay, so if your target is going to be over there, then why would you put your target at 133.80? So you're mix and matching the way how you're trading. You're using the 4 hours. Oh, there is the next level of supply. Great, I'm going to put it over there. It took you out in less than 1 day, and now you get frustrated because it's not a swing trade the way how you want it to be. See, you feel your personality, I'm going to be honest with you, is you want to be right. The market doesn't give a shit about your personality or your righteousness. They don't care. It doesn't care. Right? In trading, there's no such thing as a proper way or proper procedure. The market will do whatever it wants to do. It will move against you. It will move with you. And it doesn't really care about your opinion. It only cares what you really think objectively and what the market is telling you. So, in other words, if it's 134.78, 134.80, 134.60, and you have established that, and now that the probability that might go over there is highly probable, then you just gotta wait, because it will take there 2-3 days. The question is, do you have the patience to get there?
I mean, yeah. All right. Thanks.
So do you get it or you don't get it? It's clear, right? The way how we've been explained or the way how it's explained is so clear. Is it clear to you, Anthony? The way how it's being explained, the way how it's been shown, is it very clear from the weekly all the way to 4-hourly and going back to the weekly? And the daily in between.
It's clear.
Very, very clear. So if you choose 3377, 3380, and you're happy with that, if it goes within 1 day, then you just have to accept it, because then you should be happy because you made 100 pips. You know, but if you're saying, I want my target to be at 134.78, then you need to use the wood. You cannot use a 7-iron, because your 7-iron can only reach only up to 133.70, 133.80, no more, no less. Because it cannot go beyond 133.70. Okay? But you're buying at the cheapest price, and how did you do that on the 4 hours? You saw that there is enough evidence that, hey, it's a bullish engulfing, there's a V formation of the lows, it's a level of demand, you gotta buy. And you go back to the daily, does the daily really care about whether it was going to drop? No. Because the weekly has more hierarchy than the daily or the 4-hourly. Alrighty. So that is a clear explanation of methodology number 1 using MTFA. All right, let's wrap it up pretty much on that note. My pleasure, and we'll see you guys tomorrow. Holy moly, it's already Friday. All right, guys,
Okay,
have a good night. Ciao.
Good night.
Thank you, everyone.
Bye.
Bye-bye.